If you're just starting out, one of the hardest questions to answer is, what market do I trade? Some people jump straight into gold or indices like US30 or NAS 100 and end up frustrated. In this video, I'm going to show you the easiest markets to start with, the ones you should avoid, and how I personally went from trading easier markets all the way up to trading gold. I've mentored traders that knew exactly what they wanted to trade, and then there were others who had no idea as to what they should start off with. And I was one of those people who had the same questions when I first started trading. And the truth is, some of these markets are just way too advanced for you to start off with when you're first getting into trading. And it can also cost you months of progress, where basically you're just spending time trying to figure out this very complicated market and not make any progress. That is why I'm creating this video, in order to help you avoid all of that for good. So let me walk you through my own journey, where I started, what I messed up, and what markets actually helped me grow inside of trading. And if you don't want to waste months of trying to figure it out on your own, that is exactly why I created the Profitable Traders Academy. Basically, we teach you step by step with a proven system in order to help you get started and potentially become profitable inside of the market. So if you want to check that out, go ahead and check in the description box below for the link, and I will see you inside. So my first mistake when I first got started in trading was basically trading the exact same markets that my mentor at the time was trading. Of course, with this person being a mentor, they were a lot more advanced than I was. And I thought, well, if this market is good for them, then maybe it'll be good for me as well. I was so wrong because I tried to trade that market and it was basically a disaster. I just kept losing trade after trade. At that particular time, I was looking at the market GBP, JPY, also known as GJ. And basically what those letters mean is you have the British pound on one side and then you have the Japanese yen on the other side. So GBP stands for the British pound and JPY stands for the Japanese yen. So you have these two currencies and you're putting them against each other. One will go up, one will go down, and basically that is going to be the result of the market. And the other market my mentor was trading at that time was US30. Now US30 is a very volatile index and very tough to trade, especially for beginners. So in that index, you have a lot of very popular US-based stocks. That's where you're going to find Apple and Microsoft and a whole bunch of other companies. Basically, it's the top 30 companies by market cap. And all that means is how much money the company has. And you're going to find them inside of the US 30 market, also known as the Dow Jones. So let me go ahead and go to my computer over here and show you exactly what I'm talking about. And you'll see instantly why I believe that these two markets that I just talked about, GJ and US30, are very hard markets to trade as a beginner. Okay, so here's the first market I was talking about. I was talking about the British pound versus the Japanese yen. You can see basically it's just two currencies that are pitted against each other. So in this market, if we go here, let's just hop on a monthly since it's a higher time frame. You can see here's all the price data from this market. And if we go down a little bit, let's just say to the daily time frame, that's actually one of my favorite time frames to look at. But you can see all of this back and forth. So on my chart, the bearish candle, the candle that's going down, is going to be the purple candle, and the candle that's going up, the blue candle, is going to be the bullish candle. So that's the candle that pushes up. So in this market, you see a lot of back and forth. You see a lot of bullish, or actually bearish, bullish, bearish, bullish, bearish, bullish, basically just nonstop. And that lets you know that that market is very choppy, and basically just means that there's a lot of confusion inside of the market, and buyers and sellers don't really know the true direction of the market. So you'll see some buying, some selling, some buying, some selling, just back and forth. And then you'll have some moves like this that are very clean, all bullish candles, but usually it looks like this, where it's all back and forth in terms of buying and selling. So that is why I said that this market is difficult to trade. And then also, if you look very closely inside of this market, so when you see all of these, it means that there's a lot of exhaustion in the markets to the top side. So all that means is at one point, this candle right here, all the way up here, but then it closed all the way down here, basically saying that buyers buyers was pushing it up, and then sellers came in and pushed it down. So you will see a lot of that inside of this market on the top side, and then you'll also see it on the bottom side as well. Basically, all it means is that sellers was trying to push it down in this case, and then buyers pushed it back up. So with that back and forth price action, it makes it very difficult to trade. So the other market I talked about was US30. So let's just go ahead and type in US30 into this screen. And this is TradingView. So US30 actually is a little bit better in my opinion than GJ, but you do have some areas. Here we are on the daily time frame. Each candle represents 1 day, and we can see very clearly that price in some spots are going back and forth. You do have some cleaner moves in my experience, but the biggest challenge with this market, in addition to the candles sometimes, is the fact that right now price is at 45,569. You probably can't see it because my face is in the way, but price is currently there. And if I get one of these price labels, you can just see what it looks like. So right here at the finishing of this candle, you can see that price is at 44,802. So that means that people who trade this market typically have larger accounts, not necessarily meaning that they have hundreds of thousands of dollars. Sometimes they can, sometimes they may have thousands of dollars. That's typically okay on this market. So to trade this as a new trader, it's going to be very volatile for you. And I know that that was definitely my experience. And even as an experienced trader, at times it is quite volatile, but other times it's very lucrative. So it's a matter of building up that skill to be able to understand a market like this. The fact that it has a high valuation, a relatively high valuation of 44,802 at this particular candle, and continues to push higher at this point in time, is going to be challenging for you. So that's one of the other markets that was challenging for me as a new trader trying to trade this market. So as you saw inside of the video, basically I was showing you how challenging it was to trade US30 and GJ, also known as GBP JPY. As a beginner, I didn't stand a chance because I just kept second guessing the direction of the market, and I just got chopped up in the markets and the market took my money. And I don't want that for you, which is why I'm sharing all of this information with you here for free on YouTube. So after struggling with those two markets, I went ahead and tried out two different markets, but not at the same time, because as a new trader, it's going to be important for you to focus on one market and then get a feel for that and then move on to something else if you want to. So the first market was AUDUSD, and basically that is the Australian dollar versus the US dollar. So basically those two currencies are put against each other, and then you see a market like I'm getting ready to show you in a second. And the other market was USD JPY. So you have the US dollar versus the Japanese yen. So let me go ahead and show you how easy it was for me to finally understand market structure and be able to read the charts with a lot more simplicity versus the other two markets. Okay, so here we are back at the charts, and then let me go ahead and pull up first AUD USD. And you're going to see how much easier it is. All right, so it looks like we have a lot more back and forth in this period, but not really. So if you look at the pricing here over to the side, you will see values like 65, let's just say 65, 400. Then you have 64, 899, something like that. So basically the values for this market are really low. And then this market moves really slow compared to the other markets that I just talked about. So the fact that this market moves slower, it gives you an opportunity to really analyze the price, take your time, not be stressed, and to really grasp what the market is doing. So yes, there is some back and forth in this, but look at this for the most part. It's mostly bullish, mostly bearish, bullish, bearish, bullish, bearish. And this is more of what we want to see. We want to see back-to-back candles in the direction that we want it to be. So bearish, 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 bearish. And in that other market, we saw mostly bullish, bearish, bullish, bearish, bullish, bearish, just going back and forth a lot. So that is those are some of the two things that make this market a lot easier to trade than those others. So let me go ahead and type in USDJPY, and this is actually one of my favorite ones because once I got from AUDUSD, I went to this market and it was a lot easier for me to trade. And as a trader, I got one of my best trades on this market. So I got something like a 1 to 19 risk to reward, and all that means is if I risked $100 inside of this market, so $100, 100, then I was able to make $1,900. That is incredible. And this is one of my favorite markets for that reason. So that took a little long to draw, but basically I love that fact because the way this market moves, it moves slower than US 30 and slower than GJ. But as a new trader at that time, trading this market, I got to see a lot more profits. And that's why I love this market. So here we are again on the daily time frame. You can see very clear market structure. So in this leg right here, market is clearly going up. In this leg over here, the market is clearly going down. And then in this leg over here, it does move up some and then it's doing some interesting stuff right now. But for the most part, it's really clear to see what the market is doing compared to those more complex markets that I talked about before. So as you saw in those markets, beginner-friendly markets are really going to help you be able to understand the market structure, specifically the direction, because if you don't understand the direction of the market, you're going to be going back and forth, buying and selling, and just losing money in the process. So that's why I said those two markets, AUD, USD, which moves really slow and have really low values, and USDJPY, which is the US dollar versus the Japanese yen, are some of my favorite markets, especially as a beginner, because it really helped me understand the market and understand the direction. So that is my experience, and hopefully that helps you make a decision in terms of what you should select. So as you probably know, if you're new to this channel, you'll see a lot of videos on the gold market here. And eventually I was able to get to the gold market, but it took me over 8 months of really studying this market and really understanding the market structure in order for me to be able to do that consistently over time. So the market that I trade is XAUUSD, and the XAU part is the gold part and the USD is the US dollar part. The gold market can whip around a lot. And basically what this means that if you don't understand what the market is doing, then it's really easy for your money to just evaporate like that. And as a beginner, I had no idea on how to manage it. Yes, I was seeing some gains and some consistency inside of the AU market, which is an Australian dollar versus a US dollar market, and then UJ, which is the US dollar versus the Japanese yen, but gold was a totally different animal. So in those 8 months, what I did is I focused a lot on simulation trading instead of demo trading, because simulation trading, let's just say I had 2 weeks worth of data on my chart and I can trade those 2 weeks of data and I could see if the strategy I was using for the gold market was successful. And I could see that in maybe an hour or two of just back testing and practicing inside a simulation versus demo, you have to place the trade and then you have to wait a full 2 weeks and figure out if all the trades that you took in that time period were successful. So that's why I'm a fan of simulation trading versus demo trading, because it's a lot faster and it gives you feedback faster, so that way you can improve faster. So really quickly, let's just go ahead and look at the gold market and I can show you exactly what I mean. Okay, so the symbol that I would focus on for gold is actually XAUUSD. All right, so here it is right here. So here's the market. So this is the daily. So far, it's been pushing up quite a lot and it's super exciting. But generally, the market looks something like this, which is basically back and forth, back and forth. So for this market, when I was learning to trade it, it was somewhere way back here, actually years ago. I can't even go that far back. And in this market, the fact that it has these really long wicks can really take you out of positions and really eat up your money. So a wick like this happens quite a bit. And you can see on the downside, downside, you have these really long wicks as well. Those can be really dangerous, especially if you're in a trade and you get stopped out and then it goes in your way. I know that happens to me still sometimes on the gold market, but I just roll with it because overall I'm profitable on this market. But still, it can be very frustrating at times. So let me go ahead and go to another spot outside. Okay, here's a really ugly spot right here. So back in June, at this point, you can see a lot of back and forth, back and forth. Yeah, we do have like a little trend here. This is a nice move, but basically some back and forth. And then look at these wicks here. These are some really ugly wicks. And then you can see wicks, 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 wicks. All these wicks in here, which makes it really frustrating at times to trade. But that's why you have to have that experience before you trade a market like this. Be able to understand market structure, be able to read the candles and know exactly what they are telling you. So even though these wicks don't look like a lot, let's measure them. So if we measure this, this is almost 250 pips. If you don't understand what the pip is, don't worry about that. Just think of it as a unit. So let's just say, for instance, if you were in a trade and you were looking to risk, let's just say $100. And the fact that you were in this trade, and let's just say you did have a stop loss, which I always use a stop loss, but basically if you didn't have a stop loss and you continue to let the trade go, and say you exited right here at the bottom of this wick, that $100 loss or potentially $100 loss could easily turn into a $2,500 loss. So, or actually even more, just depending on a number of factors. So that's why it's really challenging at times to trade gold, because of these wicks, and these wicks can take you out and then go in your direction. So imagine like being in a trade, getting stopped out somewhere here, and then price just does all of this. Like, too mad. But it's just the nature of the market, and that's why trading a market like gold is going to be something that's going to be a little bit more advanced, because all of the crazy market movements, and sometimes these markets, especially this market, moves without any notice. Like sometimes you may see a spike or a wick or something like that, and there's no news catalyst, nothing happening. It just happens, and it's just is what it is. So that's why it's really important to start off with an easier market like I did, like this. And this market may move a little bit slow, and it did for me after a while. So I went to USDJPY. All right, see how clean this is? All right, try it out. All right, so before we wrap this up, I want to let you know that some of the other markets that you probably should avoid, like I have avoided, have been some of these random crypto markets where basically if it's not one of the majors like Bitcoin or Ethereum or some other one that's kind of a major, then it's going to be a lot more difficult to trade because it's not based on anything. It's based off of speculation. That was something that I played around with when I first got into trading. And I made a little money, lost most of it. So it wasn't a good experience for me. And then also the other thing, when it comes to some of these forex pairs, I mentioned AU, which is the Australian dollar versus the US dollar. That's cool. But then you have some exotic pairs, and you could Google this, but basically some of the exotic pairs, you're just going to see a lot of back and forth, back and forth, back and forth, back and forth. And that's going to just eat up your account. And you're going to think that you're a terrible trader because you're trading this market that is basically going nowhere. So that's why the markets that I chose and that helped me become a more confident and solid trader are the ones that I've shared here with you today. And hopefully it serves as inspiration as you decide a market for yourself. But basically, stay away from exotic forex pairs because it's just going to eat up your account and is not going to make trading fun at all. And another thing that people ask, can I trade with a small account? So the answer is yes, but small is relative. Small means a lot of different things to a lot of different people. So one thing I did is I took $1,000 and I traded little bits of that account, my live account, with real money on these markets that I was learning, like AU and USDJPY, and just tested it out in a live market. This was after I did simulation testing and a little bit of back testing, especially in the beginning. So that way I could get a feel of the market and just understand the movements. So that's going to be really important for you as well as a new trader. That's something that I have done successfully, and that's something that I share with everyone. So the bottom line here in this video is start with easier markets. That's going to be number one. Number two is going to be build your confidence with those easier markets. So that way, when you get to much tougher markets like gold, US 30, etc., you will have that foundation. And then once you have that foundation, feel free to move to other markets like gold, US 30, etc., because you're going to need that experience to be able to trade those markets. Trading is a skill that you build up step by step. If you try to just run into it as quickly as possible, try to just make money as quickly as possible, you are going to burn yourself up and your account. So I don't want that for you, which is why I'm sharing all this information for you to take into consideration as you build your skill set inside of trading. And if you want me to guide you through the trading process step by step, then go ahead and check out the link in the description box below. It's for the Profitable Traders Academy, where we give you a step-by-step process to trade any market. It doesn't matter. If you understand how to read market structure, which is something you will absolutely learn inside of the Profitable Traders Academy, know exactly when to enter, what to look for, when to exit, and what to look for that, you're going to have a solid foundation trading these markets. So if you want to be a part of that and you want to skip all of the headache, then go ahead and click in the description box below in order to check out the Profitable Traders Academy. Join us there. You won't regret it. And if you're not subscribed to this channel, go ahead and subscribe to this channel, because currently we are posting 3 times a week. That's Saturday, Sunday, and Wednesday, providing so much trading content and so much value here for free on this YouTube channel. So don't miss that. Go ahead and subscribe, like this video, and I'll see you in the next videos.